It's been a big week. Markets digested a softer than expected U.S. jobs report, another Fed hold, and fresh tariff drama that's shaken commodities and trade sensitive sectors. Now, as we look ahead, all eyes turn to China's next round of economic data, corporate earnings from major multinationals, and any fallout from the escalating U.S. trade actions. I'm Johanna Bota, and here to break down the week ahead is John Kicklighter, StoneX's global head of content. Welcome, John. Lovely to have you in person here in the studio.
Thank you.
So let's start with the big picture. What kind of general market conditions can we expect to get next week?
So as of Friday, it looks like there's a return of volatility, and obviously the question is whether it sustains itself, whether we have sticky volatility, because we were crawling higher up until recently, and the market seemed to be batting off all these major themes and events, and always looking ahead to what was next, rather than reacting to what had just come out. But now, with this added volatility and a benchmark like the S&P 500 or the NASDAQ 100 or the Dow Jones Industrial Average starting to actually fracture some of their slow progressive trends with very distinctive technical breaks, it's really going to throw some uncertainty in the mix. And we have seen a lot of risk-based concentration, so investors pushing more and more and more into those popular trades like the tech-heavy NASDAQ 100 relative to the blue-chip Dow. And we can see that ratio starting to pull back from a record high set this past week as well. So the markets are really looking to see, is this a lasting pullback in shifting conditions? Because while we can just look at it from a charts perspective, it really carries with it a considerable amount of broader uncertainty in the open markets. Once you start seeing those markets falter, then all of a sudden they start looking for justification of why it might continue its decline.
Are there any major themes then that you think may shake things up for either bulls or bears?
So I would say trade wars obviously is one of the most significant. And it's interesting because we were managing to avoid trade wars as an active theme. The markets were, going with what has been called the taco trade, the expectations that Trump would not follow through with the tariff threats, or that they simply wouldn't amount to a lot because there would be rapid negotiations, or as I suggested, they're just going to be a deferment. But clearly, it seems the Trump administration went through with those that had not negotiated a deal. And actually, rather than it being so clean as having everyone on a certain level or just delaying and then we have time, now we have a number of countries with a differing spread of tariff. And even those that had negotiated a deal, like the European Union, you have discontent about what it represents. And there's even more uncertainty around exactly how much tariff rates are for certain product sets, which we have in the likes of Canada, who has the USMCA deal that overrides even though those most onerous of tariff rates that they had applied to the country. So I'd say that is a significant theme and one that's really going to add to the uncertainty. I'd also say that now that you have this threat to growth, and we had some inflation upheaval as of this past week, it's going to lead to this kind of reciprocal uncertainty about what we're seeing between growth, inflation, and interest rates. After the Fed decided to hold rates and the Bank of Japan decided not to hike rates, between these tariff issues and the data that's coming out, it's going to really lead to that circular uncertainty about what influences what next.
So before we let you go, walk me through some key events that are happening next week and what's really going to shake things up or shift the focus in a certain direction.
Sure. What's really interesting about the week ahead is that we're coming off one of the most active weeks probably of the year in terms of scheduled event risk, and the market's really paying attention because it taps in. The week ahead actually is very, very light, and an overloaded docket can actually move our attention forward. It can actually mute the response reaction to event risk like we had this past week, like the FOMC rate decision. But now without any kind of look forward with anticipation, event risk that comes across the bow actually that taps into any of these themes may have better traction, especially if there is a underlying sense of risk aversion. Anything that has the smack of a deterioration can contribute to the momentum that we see. So Monday is very light. We don't really have much of event risk that I'd say is singularly influential. We're just really going to see, is the volatility of this past week going to carry over into the new week? And we will be light, so it's worth watching. On Tuesday, we get into tangible U.S. activity. So it's between the trade balance, which I would definitely watch, but then we also have the ISM service activity report and that actually is good representation of the U.S. economy, since the U.S. economy is over 3/4 service output, but also over 3/4 of the jobs in the United States are service-based. So it's very indicative of economic activity. Wednesday, I would say, earnings. It's another light day. There are a few things that may bubble up, and I don't know how earnings is going to be situated in terms of competing thematic attention. But we do have a shift away, obviously, from the big tech earners, because those have passed these past 2 weeks, and now we're moving into more consumer health measures like McDonald's or Disney. Those are going to be, I think, much more noticeable and notable. And then we'll move into Thursday's rate decisions. We have the Bank of England that's expected to cut by 25 basis points. And you have the Central Bank of Mexico, which is still negotiating and had another deferment of its own tariff rate with the United States. It's expected to cut by 50 basis points. So we want to see how, again, that reciprocal monetary policy growth inflation cycle is working. And then Friday is another light day. We have very headline-worthy event risk. We have the quarter's Chinese current account balance. So it's a broader flow of capital, not just trade balance. And then we're also going to have some Canadian employment, again checking in on the health of Canada. Not exactly as market moving as, let's say, the non-farm payrolls that came out this past week with a huge revision out of the United States. But it will certainly be in the context of these trade wars.
Okay. John, it was lovely to have you here in the studio. Thank you so much for coming and joining us. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.